For years, we've been hearing about the promise of AI in finance. It's always been this thing that's coming soon. But something fundamentally shifted in 2025. Today, we're going to unpack the data, and trust me, it tells the story of what might be the biggest shakeup on Wall Street right now.
I mean, it's the ultimate question, isn't it? The one that's been hanging in the air for a decade. Could a piece of code, an algorithm, really go head-to-head with the smartest human minds in the most competitive game on the planet and win?
Well, guess what? The data is in, and the answer is a huge, undeniable yes. We're about to walk you through exactly how it all went down, based on the numbers from a year that was, frankly, historic.
Okay, before we jump into the wild numbers, let's just get on the same page. When we're talking about AI here, we mean AI agents. Think of them as these super smart autonomous programs that are built to just devour financial information, analyze it, and then actually act on it, all on their own.
All right, let's get to the main event, the performance. How did these AI agents actually do when they were let loose in the real world against the real market in 2025? So let's set the scene. 2025 was not a walk in the park. The market was all over the place. We saw some crazy swings. It was a year that really tested the pros. And right in the middle of all that chaos, one AI strategy put up numbers that you can't ignore them.
And here it is, the big one. The AI strategy, which they called magic, pulled in a positive return of 55.17%. Just let that number sit there for a second. 55%. Okay, so is that good? Well, for perspective, let's look at the benchmark. The S&P 500, which is kind of our report card for the whole market, had a really solid year. It was up 16%. That's a great year, but it's nowhere near what the AI pulled off. And this chart, wow, it just lays it all out. You see the AI's magic strategy way up there at over 55%. And look what it's being compared to. Not just the S&P 500, but also Bridgewater's Pure Alpha Fund. That's one of the most legendary hedge funds ever. They had their best year in decades at plus 34%, and the AI still beat them by over 21 points. It's just staggering.
So what's the bottom line here? This quote from the performance report really hits the nail on the head. This wasn't just a fluke. This wasn't a new tech having a good year. These results are pointing to a massive, fundamental shift in how money is managed.
Right. So at this point, you're probably asking the same thing I was. How on earth did it do that? So let's go to our next section and try to peek inside that so-called black box and see how this thing actually works. At its heart, the AI is basically a learning machine with this endless appetite for data. It's not just staring at stock charts. It's reading thousands of news articles. But it's not just reading them, it's understanding the feeling, the sentiment behind the words. It's picking up on tiny changes in tone in a press release, or finding hidden connections between seemingly unrelated data points that no human analyst could ever spot. And, the most important part, it learns. Every single day, it takes in what happened and adopts its strategy for tomorrow. And what's really cool is that this isn't a one-trick pony. That magic strategy, the one with the 55% return, that's the aggressive one. It's taking big, bold bets on major tech stocks. But they also have this combined long/short strategy, which is more balanced, more stable, and it's still returned almost 28%. So it's about having different AI tools for different jobs. And this table really gets to the core of why this is such a game changer. Traditional funds often get too big for their own good. They're also run by people who have emotions and biases. The AI systems, they are purely data-driven. They can get bigger without losing their edge, and they process information at a speed that is literally superhuman. Now, I know we're getting a little into the weeds here. If any of this is confusing, seriously, drop a question in the comments below. We'd love to clarify.
Okay, so when a technology is this powerful, it never stays contained in one little box for long, right? The same engine that's crushing the market is now creating this massive ripple effect across, well, the entire economy. We're seeing businesses use these AI agents for everything. They're predicting supply chain problems before they happen. They're automating complicated internal processes. They're even powering those smart customer service bots. It's a total overhaul of how companies operate, making them way more efficient.
And this isn't just some abstract digital thing. This has real, physical world consequences. All of this AI needs a massive amount of computing power, and all of those computers need electricity. As this quote puts it, the most precious commodity for the AI trade right now is just power. It's driving this incredible demand for more energy. So you might be wondering, why is everyone scrambling to get on board? Well, this stat from a PwC survey tells the whole story. 3 out of 4 companies are basically saying, we can't keep up. The world is just too complex and moving too fast. AI isn't a cool new toy anymore. It's becoming a tool for survival. All right, so 2025 was the year everything changed. The big question now is, what's next? What does the road ahead look like as we head into 2026?
It's kind of crazy when you look at how fast this is all moving. Just a couple of years ago, AI was a tool that helped humans. In 2025, it proved it could be a better manager than humans. And looking forward, we're talking about fully autonomous agents, AIs that can actually explain their decisions, and even tying into things like blockchain.
So for 2026, we're watching 3 huge things unfold. First, are the big players, the pension funds, the endowments, going to start moving serious money over to AI systems? Second, can these AIs keep up these incredible returns when they're managing not just millions, but hundreds of billions of dollars? And finally, how are the regulators, the SEC, going to react when more and more of the market is being run by code?
Which really brings us to the ultimate question, doesn't it? After a year like 2025, the whole conversation has shifted. It's no longer about if AI has a place in finance. The real question now is the biggest risk investing with it, or is the biggest risk being left behind? We're going to be following this story very closely, so if you want to stay on top of it, make sure to like this and subscribe. Thanks for joining us.